Hello everyone. Today in this video, I'll be sharing with you some basic life insurance terms and definitions that you should know. Number 1. Life insurance. Life insurance is a contract between an insurance policyholder and an insurer or assurer, where the insurer promises to pay a designated beneficiary a sum of money upon the death of an insured person. Depending on the contract, other events such as terminal illness, chronic illness or critical illness can also trigger payment. Number 2. Living benefits rider. A living benefits rider allows you to access a portion of your death benefits while you're still alive, even if you've been diagnosed with a serious condition. Number 3. Accelerated benefit provision. A provision in many new policies which will allow the policy owner to receive a portion of the death benefit early, if the insured person is diagnosed with a terminal illness. Number 4. Accidental death benefit. A rider added to a policy that provides an additional benefit if the insured dies from accidental causes. Number 5. Beneficiary. The person named in the policy to receive the insurance proceeds at the death of the insured. Number 6. Certificate. A document provided to a person insured under a group insurance policy that provides evidence that the coverage exists. Number 7. Death benefit. The amount of money your beneficiary receives if you die. Number 8. Evidence of insurability. Medical and other information about a person applying for insurance that the life insurance company uses to decide whether the policy can be issued and what premiums will be charged. Face amount. The amount to be paid to the beneficiary when the insured dies. It will be reduced by any unpaid policy loans and interest on those loans, and may be increased by any dividends. Number 10. Free look. The right of the policy owner to have a period of 10 or more days to examine an insurance policy and, if not satisfied, return it to the company for a full refund of all amounts paid. Number 11. Grace period. A period of time, usually 31 days after the premium due date when an overdue premium may be paid without penalty. The policy remains in force throughout the period. Number 12. Illustration. A document used in life insurance sales presentations showing year-by-year numbers indicating how a policy will work. Usually it assumes that amounts being paid today will continue in all future years. Number 13. Insured. The person whose life is covered by a life insurance policy, the policy owner, the policyholder. Number 14. Lapse. The discontinuation of insurance without cash value when the required premium is not paid. If the cash value exists, there may be non-forfeiture provisions available. Number 15. Mode of premium payment. The frequency of premium payments during the policy year. Premium payments can usually be made on annual, semi-annual, quarterly, or monthly mode. Number 16. Non-forfeiture options. A provision in the policy that allows the policy owner to choose how the cash value of the policy will be used, if the policy is surrendered or lapses due to non-payment of premium. Number 17. Ownership. All rights, benefits, and privileges under a policy controlled by the owner, who is usually the insured. Ownership may be transferred or assigned to someone else by a written request of the current owner. Number 18. Paid-up insurance. A life insurance policy where all the premiums have already been paid, with no further premium payment due. Number 19. Policy. The printed document issued to the policy owner by the company stating the terms of the insurance contract. Number 20. Policy year. A one-year period starting on the day and the month the policy was issued. The first policy year starts on the date of issue, and ends on the day before the policy's first anniversary date. Number 21. Premium. The payment a policy owner is required to make to an insurance company to purchase insurance coverage and to keep the policy in force. Number 22. Rated policy. A policy issued with an additional premium to cover the extra risk involved if an insured has impaired health, a hazardous occupation or hobby, or is a private pilot. Number 23. Reinstatement. The restoring of a lapsed or surrendered policy to full force and effect. The company requires evidence of insurability and payment of all amounts necessary, including interest, to put the policy into the condition it would have been in had the lapse or surrender not occurred. The company is not obligated to reinstate a policy. Number 24. Rider. A provision added to a policy that provides additional benefits, usually accompanied by a corresponding premium increase or change. Number 25. Suicide clause. A policy provision which reduces or eliminates the amount to be paid if the insured dies from suicide within the first 2 policy years. Number 26. Tax deferral. Tax-deferred status refers to investment earnings, such as interest, dividends, or capital gains, that accumulate tax-free until the investor takes constructive receipt of the profits. Some common examples of tax-deferred investments include individual retirement accounts, IRAs, and deferred annuities. Number 27. Underwriting. The process of evaluating applicants for insurance and classifying them fairly, so the appropriate premium rate may be charged. This may involve a physical examination of the applicant. Number 28. Waiver of premium. A rider added to policy that will waive the premium payments required by an insured during the total disability of the insured. Hey, that's it for today. I hope you all have learned something valuable. See you soon.